Hello, Kyle Stock Bulls, and welcome to the fifth video in the YouTube series. Tonight we are going to be discussing how to invest your money. Investing your money is one of the most important steps on the road to financial freedom, and I am going to be covering the three most common ways that people invest their money in the stock market. There are three different ways or accounts that people use to invest in the stock market, known as a 401k, an IRA or individual retirement account, and a regular brokerage account. Tonight I'm going to be going over these three options and their advantages and disadvantages, so that way you can make a decision on what way is going to work best for you. The 401k is the most common option. It is used by many large employers and corporations because it is the most simple way for people to invest their money in the stock market. How it works is you generally sign up for the 401k plan through your employer, and they will take a certain percentage out of your paycheck and automatically invest it into the stock market. You are investing basically in index funds. What an index fund is it's a collection of thousands of different stocks. So you're looking at a lot of different companies in different sectors, so that way your money is spread out among a lot of different things. This process is called diversification, and it generally leads to the best returns long term. That is why 401ks are set up this way. What you have to keep in mind is that if you consistently invest your money in your 401k and it buys a lot of different companies, your average return over a long period of time generally ends up being 10% per year compounded. That is the most common return for investing in a stock market index such as the S&P 500. And the S&P 500 is just a large index of companies, 500 major companies in the United States. They generally try and choose large companies so that way your money is invested in reputable companies. That is by far the way that most financial managers will do it. This is the most common way that people invest their money in the stock market. And the reason is because it is really simple to do. There isn't a whole lot of work you have to do as an individual when you're investing in your 401k plan. You don't have to pick individual stocks. If you want to, you can choose your own funds, and your employers will generally let you know when you can do that. You generally have to log into your Fidelity, Schwab, Morgan Stanley, Edward Jones, whoever handles your financial investments. You're going to want to log into that account, and then it's generally going to lay out all the options for you there, right there on the website. Another type of account that investors can use is what's known as an IRA, or an individual retirement account. There are some people, of course, who do not work for large corporations, but they still want to invest their money in the same kind of a way that a 401k does. So what these people will do is they will put their money into an individual retirement account. The individual retirement account is ideal for people generally who are self-employed. Maybe they're in between jobs. They need something to put their money into. This is what the IRA is for, and I highly suggest that you use one. If you don't have the option to invest in a 401k, it is the next best thing that you can put your money into. An IRA works very similar to the 401k in the fact that you're generally investing in low-cost index funds. It does cost you money to buy index funds. The firm that you invest with generally collects a small fee. And how that works is you're basically paying them to invest the money for you. It's generally based on how much assets you have. So they might use, say, 1% of the total amount you have invested as a fee, or the individual funds might have a fee as well. And it will generally tell you that when you go ahead and invest in these funds, whether you're using a 401k or an IRA, it lays it out for you either way. That is the great thing. Investing process is very transparent. These companies have an obligation to do this because you are investing money with them, and most brokerage houses or stockbrokers use what is called fiduciary responsibility, which basically just means they have to look out for you and your money. It is a great thing when a financial advisor is a fiduciary, because that means they are going to try their best to do what is right for you and your money. The third option that you can use to invest in the stock market is an individual brokerage account. An individual brokerage account allows you to buy and sell stock freely. It is not tax advantaged, however, so that's the big advantage with your 401k and IRA. You don't have to pay taxes in those accounts. That is the one reason why employers love to use the 401k and IRA, because it is tax advantaged. And basically, it just allows you to not have to pay taxes until you go to take the money out. So whether you cash out before you're 59 and a half or 60, or, whenever you plan to retire, if you cash out before then you will have to pay penalties, generally of about 30%, which is federal and state taxes for the money, just like if you earned it as regular income. That brokerage account doesn't have the tax advantages that the 401k and the IRA do. So anytime you buy and sell stock, you will have to pay taxes on your yearly tax return. Capital gains, which is the taxes that you pay on the buy and sells of stock right now, is the same generally as ordinary income. It does just depend on what tax bracket you're in, and you're going to want to consider talking to an accountant, because they're going to be able to tell you how much you're going to have to pay in taxes. You always want to make sure that you get an accountant when you're investing. It's just a very important thing to have. If you want to go ahead and do your own taxes, you can as well, using a program like TurboTax or something like that. But when you're investing, it's a really good idea to take your money to an accountant, because they are professionals in tax and you can easily make mistakes doing your own taxes. So why would anybody want to get a regular brokerage account then? Well, it allows you to purchase, buying, and selling stock for yourself. You can actually trade stocks by yourself without having to use an employer's 401k or retirement plan. It's a good thing to be able to invest money that's outside these plans, because you can try and take advantage of short-term moves in the stock market if that's what you choose to do. Some people advise against day trading. I've been day trading since I was 19 years old. I'm 22 now. It all just depends on your style and what you like to do. There's a whole different set of rules for trading stocks, and I will make a video about that later in the YouTube series. But individual brokerage accounts are generally for people who want to handle their own money. Also, another thing that has happened recently is a lot of individual brokerage accounts now allow commission-free trading. This just happened recently as brokerages have been competing to get client money, so they reduced the fees or made them zero for you to buy and sell a stock. It used to be around $6.95, whatever your broker you used, or sometimes it was more, and you had to pay that fee each time you bought or sold a stock. So there's really been never a better time to invest than right now, because we have free buying and trading in a lot of different brokers, which is awesome for investors. So those are the main three types of accounts that people use to invest their money in the stock market. The big advantages with the 401k is the fact that it does have that tax advantage I talked about. You don't really have to manage the money on your own, and a professional will do it for you. The disadvantage to the 401k plan is, of course, that you do have to pay fees to invest your money in these index funds. They're not really large amounts, but that's really your major disadvantage with the 401k plan. The IRA plan is exactly the same way. It has the same tax advantages. You pick the funds that you want to invest in, and your stockbroker, whoever handles your finances when you're investing, will generally give you a list of funds to choose from, or they may even help you as well if you want help investing your money in the stock market as an individual. Like I said, a lot of self-employed people love these because it gives them a chance to invest their money too, because not everybody works for a large corporation, and it allows anyone to be able to invest their money in the stock market. And lastly, you have the individual brokerage account, which allows you to buy and sell stock It does not have any of the tax advantages. You have to pay your taxes whenever you buy and sell your stock. That's really the only major disadvantage to the individual brokerage account. You don't have to pay a fee each time you trade. And this is going to be generally for more experienced traders or people who want to manage their money on their own. Whether you want to take it to somebody to manage, such as a financial advisor or professional, or you want to do it on your own, it's completely up to you. Some people like myself use an option of both. I may invest, for my retirement plan and work and let the professionals handle that. And I like to do my own trades as well. So that's something that you can do as well. You don't have to be stuck on one or the other. You can do a little bit of mix of both, and that's what I would probably recommend you do, but you can do your own research and decide what you would like to do. Thank you for watching YouTube video 5 of the series, How to Invest Your Money. I will be going over some topics later on to tell you the specifics about how you sell and buy individual stocks, because that is a very important thing if you want to manage your own money. Thank you so much for watching. Share with your friends. Smash that subscribe button. Give this video a like. Leave a comment down below. And I will see you for YouTube video 6 tomorrow.